Okay guys, welcome back. So in this episode, we're going to be talking about why interest rates don't always matter. And I'll share with you a story about a client, actually several clients recently, that have gone through the process of a refinance and their interest rates actually went up dramatically. So one of the clients that I worked with just recently, over the past couple of weeks, they refinanced to a mortgage rate that was 1.25% higher than their current mortgage rate. However, because we were able to consolidate debt, so equity, especially in Utah, but nationwide, equity has dramatically increased. We're talking in the past 2 years, somewhere in the range of 25 to 60% in the past 1 to 2 years, depending on when you bought. So over that time, they developed a significant amount of equity. And by tapping into that equity, that's exactly how we created the power and why the interest rate didn't matter for them. So like I said, they went up 1.25% in rate. However, by combining debts into their mortgage payment, of course, the balance increased, the rate increased. So the mortgage payment went up about $750 a month. However, they were able to eliminate debts of just over $2,800 per month. So they eliminated the mortgage payment plus all these other debts. The mortgage payment ultimately went up compared to the original mortgage by about $750 a month. The net savings were $2,050 per month. Now what they did with this money is where the power comes in. The $2,050 per month is now freed up in their monthly budget. They're already used to spending that money. And I encourage them, hey, let's turn around and reinvest that money into the mortgage. And by reinvesting into the mortgage and prepaying their mortgage with the same money out of pocket, they were able to reduce their mortgage term from 28 years remaining on their mortgage and pay it off in 11 years. So in the same money, they could get their mortgage paid off in 11 years. What that equated to was about $420,000 in savings with a higher interest rate on their mortgage. So I encourage you, consider your options. Mortgage financing surface level, from a consumer perspective, mortgage financing in my world, it's all about what are the rates, what are the fees, I gotta get 20% down, I've gotta get rid of PMI. All these things are important, but not the most important. Not one of these things is the most important. The most important thing is to have a holistic view on the mortgage as a whole, on the asset, the home, and how much we can leverage and use that leverage to create better wealth for you and your family. This is just one example of it. Now, one other example, this is for people who may not own a home today, but it is still critically important, is think of the people that bought in the peak. This was like back in 2007. People bought in the peak, and we slid further than we've ever slid in recent history, perhaps ever in history before. The market slid and values just kept going down and going down. Many people sold, many people foreclosed because they actually got into loans that they shouldn't have gotten into. Nowadays, that type of thing does not happen. You're definitely qualified if you get into a loan. But the ones that held on, despite the fact they bought at the peak of the market, prices we had never seen before, they held on for just a handful of years. We're talking maybe 5 years. And they had really high prices, higher rates compared to 5 years into the future. 2007, let's say 2012. Really high rates, but because they held on, they continued making their payments, which is amortizing their debt. And amortizing your debt means that each month you're paying that balance down bit by bit. You're gaining equity every single month. And with the turnaround, as economics go, we always see ebbs and flows. If it goes down, at some point it's coming back up. And for these people, it did. These people were able to hold on, and 5 to 7 years down the road, cash out with hundreds of thousands of dollars in equity. And then they just simply had to rinse and repeat in a much more favorable market. Home prices were actually some of the lowest in history, comparably from an affordability perspective, and interest rates were extremely low too. So interest rates don't always matter. Don't fret about when you're buying. Should I wait for rates to fall? Don't get yourself confused. Get with a professional. The Lassig team would love the opportunity to help you understand what your options are and how to take advantage of this opportunity before you. Thank you for tuning in to another episode of Loans Elevated. To stay up to date on all industry news, please follow us on all platforms at LoansElevated or at Broch Lassig. If you're interested in learning more about what your financing options are, please reach out to me and my team at 801-713-4000 or visit applywithbroch.com. I look forward to working with you.